David Lennox, analyst at Fat Profits, now joins us with his sense on what really could be seen going forward in case of metal prices there. David, hi. How do you look at, first of all, the kind of data that we have seen coming from China and its impact on metals?
Hi, Manisha. Well, look, certainly you'd have to suggest, as you've already said, that the data that we're seeing is showing somewhat of a softer side of growth in China than we've seen over many years. And that's to be expected when you think about the fact that we've got their zero COVID tolerance, which means cities go into shutdown. That obviously stops activity. And we've also got the demise of their property sector. So any growth that was perhaps coming from that sector is now going to be impinging on growth. So one would expect to see over the course of the next probably 3 or 4 months of data read, we'd expect to see China showing continued slowing in growth. On the counter side to that, we're well aware already that the authorities are moving to stimulate certain parts of their economy. So as long as they're trying to do that balancing act, the market should be a little less concerned that we're going to see really drastic or damaging numbers coming out of China. There will be some cushioning because of the change in rhetoric from the authorities, and that's probably just keeping somewhat tension in the metals prices to the upside.
But David, that's a bit just about China. How do you look at the European Union, the power concerns there? That really seems to be leading the metal prices, some support. We've seen so many news of smelters closures there. But on the other side, the power rationing, no electricity availability also has led to fears of recession there. That really is a double whammy there, would you say?
Look, there's no doubt about it. Europe's been really the centre of focus, and it is that very much what's going to happen in terms of their energy as we come into their winter. And if there is a serious disruption or in fact a complete blocking of energy going into that particular region, then yes, there's going to be a considerable downgrade in their growth and probably will lead somewhat to a recession. What we would expect to happen is we would see the central banks actually starting to move more towards perhaps easing and living with inflation that they've got at the moment. But look, that's something that we'd have to wait, watch and see. But at this point in time, yes, Europe's going to, we think, have considerable tough winter, and that could ripple through to the rest of the global economy. China's taking the right steps in stimulating. They need to stimulate certain areas to at least have some form of balancing. We could see Europe going down that same road and then deal with the aftermath later.
All right. So while there is, of course, the factor about China and then Europe, and the third important point clearly is about the interest rate hikes that we've seen global central banks do, and another one coming in from the US Fed on 21st of September. What kind of impact do you see of that on metals?
Well, look, certainly what we've seen happen is as the interest rate differential widens in favour of the US dollars, in fact, rallied quite significantly on the back of that. Plus, as we've just talked about the malaise going on in Europe, we've seen the euro collapse. So one would expect that as those interest rates differentials start to continue to widen in favour of the US, we will see that US dollar stay to the strong side. And as we've seen over many, many occasions, a strong US dollar just does not bode well for commodity prices. And that's really, again, the driving factor that's kept gold in check. It's kept base metals from rallying quite strongly when you throw in the other factors as well. And really, we do need to see that US dollar roll off its highs. The metrics are all there. They've got a slowing GDP. They've got rising debt. So one would expect at some stage investors are going to focus on that. But at the moment, you try and find a currency that's in any better shape than the US, you just can't find them. And that's what's keeping the US dollar to the high side.
Well, I would agree with that. So before I wind down this conversation, a final question really, and this is on numbers purely. So US dollar index, where do you see that headed? And if you had a top trade to take in metals, what would that be?
Manisha, look, we've been calling the US dollar to the downside and we've got it dead wrong. One would have to suggest that somewhere around these levels that we have probably seen the top side in the US, but saying that is quite dangerous. So look, we would think that we would probably see the US dollar starting to slip back, that index heading back towards 100. But at this point in time, it's difficult to see the catalyst for that. And if we had to pick a metal, we'd be certainly looking at lithium and nickel. the long-term prognosis that we see on both of those is very good when it comes to the auto industry. They'll live through the current cycle and they'll live through many cycles, but there's certainly growth to be had in both of those two metals, we think, well down the track.
Okay. Manisha and David, thanks a lot for joining us and giving us a quick update on what's happening in the world of commodities.